We're with Samuel Pelaez, Portfolio Manager at Galileo Investment Management. Sam, thank you for being here with us.
Thank you for having me.
So let's go over from the very beginning what your case for lumber is here in Canada.
Well, generally, I think the case for lumber continues to be strong. Numbers out of the U.S. for the housing market have tended to get a little softer the last couple of months, but they remain at elevated levels that should be supportive for lumber prices as a whole. In addition to that, we have talks with President Trump and his infrastructure plan should give a healthy boost to lumber demand in the U.S. as we go on.
Okay, and for the housing market, for example, in Canada and U.S., does it also make you bullish on lumber?
Absolutely. We actually just saw new home sales in the U.S. Continue to be. The March number were fantastically strong, strong beat compared to the trend that we've been seeing recently. So definitely.
Right. And how about in Canada among millennials and also the older population?
I think the millennial case in Canada is not that strong because housing prices have risen so much.
Right.
But in the U.S., we've started to see a very significant portion of the millennial population begin to buy homes. They've held out for a very long period of time, but now the demographics are kicking in and they're reaching that point where they're joining the housing market, and that should give a strong base of demand as we continue.
Mm-hmm. And there have been concerns over a border adjustment tax, and Canadian producers have been underperforming. But long term, why are you positive?
So the Canadian lumber producers are among the strongest in the world. We have fantastic supply of lumber in Canada, and the reason they've been underperforming is because the softwood lumber agreement with the U.S. expired in 2015, and there's been no resolution since. And since Trump took office, there's been fears that there could be some sort of retaliation.
Right.
It looks like that we're now solving that. Actually, very recently, the Department of Commerce actually came out with what should be around 20% import duties for lumber, and that's significantly lower than what analysts were expecting. So that should help, a significant re-rating in the Canadian lumber producers.
Very good. And do you have a stock pick at this time for lumber?
Actually, we do. We do like Western Forest products. The reason we like it is they're a specialty manufacturer. They have higher margins. They only have about 25% exposure to the U.S. The revenue mix is fairly diversified, so they're not very much affected as some of the other lumber names could be to this U.S. policy and U.S. Import duties. It's an $800 million market cap. They generated $150 million EBITDA last year. That makes them about a 5 times EB to EBITDA, whereas their peers are at 8 times, so about 35% re-rating potential for this name specifically.
So Sam, let's move on to gold. What's your outlook for it given the recent price weakness? And what catalysts are there to move it higher or lower?
So we definitely continue to like gold here. We've seen data in the U.S. continue to weaken. We've got weaker CPI. The Atlanta GDP nowcast that they call continues to weaken significantly, and that is generally not supportive for a strong dollar, which in turn tends to be supportive for strong gold prices. Mm-hmm. When you look at the macro data that we're seeing, the crude prices, commodity prices, the S&P 500 level, that data is not conducive for 4 hikes that the Fed was initially talking about this year. So we continue to see the opportunity for the number of hikes and for the expectations to lower.
Okay.
And that should be supportive for gold prices going forward. There are 2 companies I'd like to talk about. The first one is called Rightpatch Gold. This is a Canadian company, about 110 million market cap. It is actually going to be the next gold producer in Nevada. As soon as this quarter. They have all permits in hand, and they've recently irrigated the leach pad, so they should be producing by the end of the quarter. This company has a phenomenal management. Bill Howell, who's the CEO, he acquired this property out of a, call it distressed seller at the trough of the market. And we tend to like those opportunities of low capex, low cost, high return, opportunistic buying. Those are high return invested capital names that we like to have in our portfolio. The next stock pick is Nova Resources. This is also a Canadian company, but this asset is in Australia. It's going to be a high grade open pit. It's also a low operating cost opportunity because this is the kind of deposit where you don't have to blast, you can just scoop the gravel very easily, and it has very, very high gravity recoveries. So it's, again, a low capex, low cost opportunity. Right. This is further down the line. They're still in development, but it's catalyst rich. We should see a resource update in the coming months. We should also see the preliminary economic assessment, the PEA, coming out in the next few months. And we expect to see very high rates of return coming out of this name specifically.
Right, and for other companies that you've seen, mining companies, or maybe not even the mining sector, what are some red flags that you just stay away from?
Well, number one is the geologic deposit. You want to be very cautious with the kind of work you do to assess the validity of the work, especially some of these companies like Novo, who have not yet released a PEA or a 43-101 on the deposit. You want to rely on the experts to give you that kind of context, and so, to have that extra degree of certainty that the deposit has the ability to turn into a great cash flow generator.
Okay. So just out of curiosity, when a company is really just highlighting the fact that they have a historic deposit, what does that mean for you?
I mean, generally, some of the best acquisitions that we've seen in the junior gold space and in the junior mining space as a whole have been from historic deposits that had some data associated with them, because discovery has become very expensive. And it's actually very exciting to find these opportunities, but you want to be very careful about management. Make sure that they have a track record of doing so. And you want to go over the data and the historic data, and especially see if the recent drilling that they do validates what's in that older resource model. That's critical.
All right. Well, Samuel, thank you so much for your insight today.
Thank you for having me.
To learn more from experts, you can go and watch your other videos on smallcappower.com.